And King Hall, our senior markets correspondent. All right, here we go. Netflix, it's the streaming business. It's the one that is also cracking down, of course, on shared accounts, offering a cheap advertising-supported version of their offerings, and the total global streaming paid memberships in the second quarter were just shy of 278 million. So the shares off a little bit here in the aftermarket, but Netflix was coming into this right below the highs. The revenue outlook for the third quarter looks a little bit light compared to the Bloomberg estimate, which was for $9.83 billion. Netflix is predicting revenue of $9.7 billion. Yeah, so it kind of looks a little shy there, Diane.
Yeah, it looks like, and I wonder if that's what the question mark is, because look, they did beat on the top and the bottom line for this this quarter gone, 4.88 for EPS, revenue 9.56 billion, so a slight beat on both of those numbers. But yes, as you mentioned, the guidance looks a little bit light. Net additions came in. It depended on what was your reference point for additions. I mean, there were some metrics saying, okay, the addition of paid subscribers would be 4 million. Some said it would be double that, 8 million. And so we saw that come in a touch above that with an addition of 8 million as they continue this kind of password sharing crackdown, because they've come after that before. But I do wonder also if they are continuing to be punished for what they said about, you know, they weren't going to continue to share those numbers with regard to the subscriber numbers starting in 2025. You remember in the previous quarter, that was why the stock took a hit before.
Yeah. The numbers, you know, for streaming still are pretty impressive. Streaming paid net change up 37%. You know, revenue's up 17%. I mean, I got to say, George, I feel like out of all of your, you know, Mag 7 top 10, Netflix looks like the most reliable, stable, no, you know, shocker. I mean, just a real kind of utility of entertainment at this point. I feel like we've moved on from it as like a higher beta growth play.
Well, I agree. I mean, it's a stable name. It's performed exceptionally well over the last year, and it's been steadily moving to the upside. And it really, I think it comes down to the economics of their pricing plan. And they actually made just another adjustment as well. They're going to be removing their lowest priced paid subscription plan, which is close to $12. So what that is going to do is essentially, for those who are at the margin, either go for the advertising free model or essentially have them move up to the higher paid plans. So I think that may be one of the reasons why we're actually seeing some adjustments to the revenue for next quarter. But nonetheless, if you look at the EPS adjustment, they're actually moving higher, that number, as well as, again, slightly higher for total revenue growth when it comes to fiscal year 2024 from 13% to 14%. So I think it looks like to me that they're confident in their newest adjustment to the pricing plan, because the advertising model has actually been quite successful for Netflix, because it really kept those who are at the margin on their platform, and that's really what you want, and that's been a game changer for their underlying business.
Okay. It also just really hits at a time when we've talked in many ways about people drawing down their expenses. Pretty cheap entertainment, pretty affordable with the advertisements at this point, Diane, where I don't see you know, a lot of people cutting these. I'm sure they will, you know, when times get tough or if they don't like their shows. But I think there was a worry that people were going to be really like cutting around their shows like frequently, and the churn was going to be high. The low price point, the advertising supported stuff kind of eliminates that.
Yeah, I think that's the case, and especially for Netflix, as it just kind of remains the leader in the streaming space. I had a conversation earlier, I forget who it was with, where we just talked about that, you know, the competition for Netflix really is largely Netflix itself. I mean, sure, there are, other streamers that are competing, and, maybe a little bit of YouTube if you want to kind of compare it to somewhere else that has, a sticky space in terms of people continuing to hold on to their subscription there and them being able to hold on to the eyeballs there. The other way that Netflix is growing, that it's clear that they're trying to kind of make further penetration and gain a greater audiences with live sports programming. You've seen them planning to increase that and to draw in a different type of viewer.
Yeah, the viewer base is now expanding and at a pace that's pretty solid, but will also kind of slow a little bit. Some of this growth is going to slow a tad. But I mean, they still were able to give a really good outlook here for 14, 15% growth. It's just going to be a couple, just a tiny tick down. But that's kind of the point of describing this as a utility, George. I really do feel like this has now hit their stride as a reliable. That being said, their cash flow is down though. So to Diane's point, they still don't want to spend too much. They're going to have to be careful about that. They don't want to overdo, like trying to work the video games in and some stuff like that. That's kind of like lower tier for them.
Yeah, I mean, I think if you just look at the reaction too, in a nutshell, outside of next quarter's revenue, which is slightly soft, I mean, the earnings guidance is actually robust. So to me, that speaks towards an adjustment based on some revenue recognition in terms of their pricing structure. And so I think that's the culprit in that. You can see that they're bidding it back up as the initial sell off because, the algo traders are going to sell it based upon the missed print in terms of forward revenue estimates that they're providing versus the previous guidance that was expected. So overall, it's a pretty constructive quarter because if you look at the net adds, I had 4.8, but it looks like the midpoint guidance was 5.1, so they came in over 8 million in net new adds for the paid subscribers. So that, to me, is a successful print in terms of the quarter. But nonetheless, they're causing a little volatility in the after hours here, based upon again that slight adjustment for next quarter's revenue.
Okay. All right. Look, stock trying to hang in there. Took a little bit of a dip, but I don't see why this would require some big repricing in either direction, really. The other thing, even though it's been on this incredible rally, it's important to keep in mind that we hadn't made new highs, so it is in a different camp than its peers in the Mag 7 that have been breaking records for a while. This has been mostly just a comeback story, Diane. We've been here in Netflix before. We've been at $700 in Netflix before, so it's not like we're asking too much.
Yeah, it's true, but it is a different kind of company than the others in the Mag 7. I mean, look, it's not one of the AI players. It's not a tech company in the same way that you have, say, NVIDIA, Meta, et cetera. So it's going to be perceived a little bit differently. But if you compare it to, say, its shares growth over the past year compared to the S&P 500, I mean, it's double.
Yeah. It's impressive. I think it's a good standout, to your point, among the peers right now. Because, look, even though there's this incredible stuff happening with all the AI, that's where all the valuations now are going to have like heavy pressure to perform. I feel like Netflix performed fine here. I don't think there's too much else to say about it. It's a pretty predictable business at this point. Fair enough to say, GT, last thought real quick?
Yeah, I think that if you look at the quality of the sales and earnings growth, there's nothing outlandish, and I think that speaks to what you mentioned just a moment ago. The logic chip makers like Microns and Nvidias, they just had magnanimous growth over the last year. So what do you see? You see parabolic moves higher, then sort of a deconstruction happening in those names, whereas Netflix has just been steady as you go, just because of the quality of the earnings are improving. And again, it comes down to the rate of change in sales growth, which is, again, increasing at a declining rate because of saturation. But the bottom line is improving, and that's what's most important here.
Okay. All right. Thanks, guys. Good stuff. Good analysis. And that's our highlight of the afternoon for Netflix. Beginning the entry to some of the giant earnings, but most of them still a good ways off.